Hello, everyone. Welcome to the PwC podcast Tax Bite series. Today, we will talk about tax transparency and some important steps in the short, a bit longer run that will come and will increase transparency. I have with me today a number of our experts. We have Daan Verburgt. He knows the ins and outs of DAC6, not only in Belgium, but in Europe. We have Annelies Butaille, an expert in tax control frameworks and lots of experience in setting up a control framework for taxation. We have Tamara Geboers, working day to day, let's say, in the trenches with companies on transparency and sustainability. So it's promising to be a very interesting discussion today. Let's start with the beginning. 1st of January is coming. I hear DAC6 is going live. Daan, from your day-to-day experience, is there anything you can share with the listeners on the challenges of DAC6?
Thanks, Peter. So indeed, DAC6 has been in the air for a while now, and DAC6 is the fifth amendment of the Directive on Administrative Cooperation and includes a mandatory reporting obligation for certain cross-border arrangements. So indeed, the rules will go live in all European member states on the 1st of January 2021. And as a result, we believe that in the first 2 months of the new year, there will be a lot of transactions that are to be reported to the tax authorities, and also the first time that there will be an exchange of that information between the tax authorities of the different member states. So in brief, we could indeed say that it is showtime for the mandatory reporting obligation. And over the past few months, we already learned a lot about DAC6 and the challenges it brings to our clients as regards to complying with the reporting obligation. I can share, I'm happy to share some of the main takeaways we've learned so far. The first thing is that the reporting obligation stems from a directive, and this implies that a local implementation is required in each member state. And luckily enough, most of those countries have opted or basically copy-pasted the directive in their national legislations. Sometimes they even they had some errors or certain commas that were put in the wrong place, resulting in different rules. But in general, the countries have implemented it in line with the directive. But now we also see, recently we have seen specific guidance coming up in each country, and in that specific guidance there are some differences in the interpretation of certain concepts in the directive. For example, we had a case on an IP regime, and from a Belgian point of view, we thought, or we believed that after our analysis, there was no reportable transaction because the main benefit test was not met. And the same for the same transaction from a German point of view, the transaction was deemed to be reportable because the main benefit test was met from a German point of view. So we see that for even those crucial concepts as the main benefit test, there are some deviating opinions throughout the European Union, so between the different member states. A second lesson we've learned is that the reporting obligation imposes a risk for taxpayers to lose control on the information that is reported on their behalf, so on what they are doing, because DAC6 is a directive that actually imposes an obligation to report on intermediaries. So this is the first time that there will be information reported on your behalf that the taxpayer will have no control over. And this is specifically important in times where tax authorities have increased tools and increased means to have broader audits. So the lesson we learned is that it's key for taxpayers to build in an appropriate framework as regards to cooperation with their intermediaries and their advisors to ensure that the information that is shared on their behalf depicts a coherent picture globally, and is also in line with other information or that is shared with tax authorities through other sources than the DAC6 reporting obligation. A third point is that in some instances, the reporting obligation shifts from the intermediary towards the taxpayers. So this means that a taxpayer will need to file reports in potentially all European member states. And of course, each member state has its own format of reporting and its own formalities. And there are also differences in those formalities. So businesses will need to rely on service providers to enable them to prepare those reportings in line with the formalities of each of the member states. And since this point is becoming clearer or became clearer in the last few months when the specific local guidance came up, we see a significant increase in the clients signing up for our central reporting service or DAC6 assessment tool that enables taxpayers to immediately create the appropriate file, being an XML file or another format, to report. I will not go into much detail on our service offering, but if you're interested, you can always have a look at our website or our DAC6 flyer. So I think those are the few or the most relevant takeaways we've learned so far.
Okay, thanks Dan for sharing that. Yeah, 1st of January will be an important date to be compliant with DAC6, to timely report and correctly report. But of course, DAC6 is one step of a part of a bigger picture, I would say. Tamara, I would be interested to learn from you. How does that bigger picture look like?
Yeah, Peter, so there are indeed quite a number of tax transparency measures that are being taken, both from a regulatory perspective, but there are also certain initiatives which are more driven by stakeholders and by the public opinion. I will give some examples in a minute, but I think it's important to stress first that this is a trend that we see now and that will continue. So we do expect and we know that even more measures will follow, and this will result in a very big amount of information which will be available at the level of the tax authorities. And that will also be exchanged with other tax authorities. And by the way, this is not limited to corporate tax or transfer pricing information, but it also includes indirect tax information. If we, for example, look at the e-invoicing requirements over the different countries, we see that also from a VAT perspective, a lot of information is and will be available for the tax authorities. And of course, it's all interlinked. For example, the information that the tax authorities have available from a VAT perspective can mean that tax authorities will start looking into the tax presence of multinational enterprises and thus challenge them on, for example, the existence of permanent establishments in these countries. So if we then look at the different measures that are being taken, Dan talked about DAC6 and the reporting that will soon need to be done, but we also already have a DAC7 proposal. That focuses on the one hand on the use of digital platforms, but it also goes further than that, as it also includes measures to facilitate cross-border tax audit and makes the exchange of information more easily. There's also new information on the list of information that countries need to share amongst each other on a spontaneous basis that will be added, for example, royalty payments. And again, here we see that link between direct and indirect taxes, as DAC7 also brings VAT into the scope by stating that the communicated information between EU member states may also be used for the assessment, administration, and enforcement of VAT and other indirect taxes. Now, what is the status of DAC7? Well, beginning of this month, a consensus was reached on the DAC7 proposal, and it is expected that the DAC7 proposal will be adopted in the coming weeks and that member states will need to enforce it by the 1st of January 2023. So DAC7 is not even finally approved, and DAC8 is already announced. DAC8 is an initiative to extend the Directive on Administrative Cooperation, or DAC as we call it, to include crypto assets and e-money. So it is definitely more specific, but it is important as it demonstrates the EU's willingness and speed to move forward with the transparency initiative. Now, I discussed some of the regulatory demands that are ongoing, but we also see more and more initiatives coming, which are driven by stakeholders and the public opinion. For example, a new tax standard within the Global Reporting Initiative, or a proposal for public country-by-country reporting, following which multinational enterprises will also disclose tax information and how they deal with taxes publicly, for example, on their websites. And of course, all of this comes on top of the existing initiatives, for example, the non-public country-by-country reporting, so the transfer pricing documentation, exchange of rulings, and others.
Thank you, Tamara. So the regulatory train has definitely left the station. DAC6, 1st of January, but much more to follow, I would say. Um, I'm sure there are other drivers to transparency as well. And Annelies, I would be very interested to have your view on this.
Yes, Peter, thank you. There definitely are. I think in many countries, tax authorities and taxpayers are increasingly trying to strengthen the level of collaboration and trust amongst them, aiming to be a win-win for both parties. And we notice this especially by the multiple new cooperative compliance programs and horizontal monitoring initiatives popping up in many countries, Belgium, Europe, but even around the world. Now, to be part of such program, tax authorities demand that the taxpayers have and that they can demonstrate the availability of robust tax processes, tax controls, etc. The taxpayers hence have to communicate in a very transparent way on their strategy and tax risk management processes, laying lots of tax data open on the table during discussions with tax authorities. And finally, there's definitely another trend, and equally important. We also notice that there's an internal demand for increased transparency. So the measures before are driven by external stakeholders, but there's definitely also an internal demand within the enterprise or the group itself. Tax function is definitely no longer a static post factum compliance driven exercise, but is now really evolving into a strategic partnership with the C suite. Tax is becoming a key topic when groups decide on business and operational changes, and the tax department needs to be able to anticipate proactively to these changes as opposed to just reacting to them. And this change also requires availability of transparent, real-time data to have the discussions with the board. Now, combining, I think, what I said with what Tamara said and with what Dan said, and bringing this all together, groups, taxpayers should be very critical about that story the tax data tells. Is your story consistent around the globe? Is it aligned with the company's overall objectives and strategy? Can you explain changes to your data? Is there an economic rationale underlying a change in your data? So definitely all important things to think about.
Yeah, thanks, Annelies. So I think the last point is a very valid point. So it's about making sure that the story that your data tells is matching what actually happens, irrespective of whether you look at it from an more operational perspective as a tax inspector or whatever, basically. So, but this is a huge challenge for businesses. Can you share a bit with us, Annelies? How are taxpayers coping with this?
Yeah, that's an interesting question, Peter. And to cope with all of this, we see that companies are, or at least should consider the design and implementation of well-documented tax governance processes, commonly referred to as a tax control framework. And I think, Peter, we might want to spend a separate episode on some best practices that we see with respect to tax control frameworks. But just looking already of the key building blocks of a tax control framework as laid down by the OECD, a well-functioning tax control framework means that companies have to carefully lay out and document their tax strategy. Sometimes it even needs to be made public. Companies need to set the tone at the top when it comes to tax management and tax risk appetite. And they need to think carefully how this strategy is rolled out throughout the firm via robust processes, roles, and responsibilities. Another key building block of a tax control framework is the implementation of effective tax risk management procedures. This starts with the proper identification of the key tax risks and the tax positions taken. Now, what we mentioned earlier regarding transparency, a company's tax strategy should include being very well prepared that all the key tax risks and the positions taken by the company in this respect might eventually become public disclosures at a later point in time.
Okay, thanks, Annelies. I think this is very valuable information for the listeners on how they can cope with these challenges that are coming towards them. Tamara, I'm also interested to hear your side and your experience with how businesses are preparing for this challenge.
Yeah, Peter, this is indeed very interesting. And I think that Annelies already referred to documentation and clearly describing roles and responsibilities. Well, this is indeed what our clients are now doing and what we recommend them to do. So, for example, from a transfer pricing perspective, multinational enterprises are reinforcing their traditional one-sided transfer pricing models with a broader story linked to their value chain. And from a more international tax perspective, documentation is available or is being prepared to substantiate that the entities in the multinational group structure, especially when it relates to holding, financing, or IP companies, have been set up for business reasons and have sufficient economic substance. On the other hand, Annelies also talked about the implementation of tax risk management procedures, and here we really recommend our clients to stress test their structure. What does it mean? Well, it means reviewing the compliance and the sustainability of their tax and legal model, taking into account, on the one hand, the transparency developments, as we discussed in the beginning of the podcast, but also the tax developments regarding, for example, new anti-abuse measures, beneficial ownership and withholding tax, etc. So multinational groups should really be able to defend the compliance of their tax positions and, of course, also carefully consider future transactions in order to avoid tax audits, unpleasant cash surprises, but also, very importantly, reputational risk.
Okay, thanks, Tamara, for sharing that. And this brings us to the end of our podcast on tax transparency. Thank you for sharing all of this. I think for the listeners, it's very inspiring to hear what other businesses are doing to cope with the challenge of transparency. The first step, the first challenge will be 1st of January when DAC6 is kicking in, to keep control over that process, to be compliant and timely report whatever needs to be reported. But the bigger picture is important, I think, and taking steps now will enable your companies to be transparent and to be compliant also in the next 12 months. This brings us to the end of this podcast. I want to thank the speakers for sharing their insights, and thank you, the listeners, for listening in. I would say stay tuned for our next episodes. Thank you.